time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
All right, so we got a question from Brenda via email, and she asked about our take on Costco Wholesale Corporation, symbol COST or symbol COST or cost on the NASDAQ. Costco is a leading warehouse club. Costco has 847 locations worldwide. It sells membership that allows customers to shop in its warehouses, which features low prices on a limited product assortment. The stock is trading around $488 with a market cap of $216 billion, and it is up roughly 8% year to date. The company does have a small dividend, yielding about 0.8%. Costco just released its Q2 2023 earnings on March 2nd, reporting an increase of net sales, including membership fees, by 6.5% to $54 billion, but that growth was largely due to gas inflation and foreign exchange changes. When removing the pricing changes of those, net sales actually shrunk by 8.7%, showing a weaker picture than just the standard net sales. It is important to consider these effects of foreign exchange and inflation and other external effects, as management just can't control them. So you really want to look at the company's operations when you're now analyzing a company. Obviously, the overall, including inflation, all those matters, but you want to really break it down once you're looking deeper into a company. Earnings per share slightly increased by 2.7% to $3.07 per share from $2.99. Looking at a longer period of time, so the trailing 12 months, the company had EPS of $13.26 compared to $11.65 over the previous trailing period. The limited growth for the quarter combined with the trailing 12 months can really show the macro slowdown over the last 6 months, really. Costco saw big ticket discretionary items drop by 15%, while the membership, so people signing up for their memberships, grew by 7%, and food sales grew by 9.6%, really showing that shifting consumer spending habits that we've been talking around about the last month or so. Moving to the balance sheet. Simply put, it's strong. The company does have net debt of $9 million, including the leases, but a cash position of $10.9 billion, resulting in a net cash position of $1.8 billion. A net cash position is always great to see when economic conditions are questionable, because it always gives them some opportunities. Let's say they can pick up probably not Costco case, but they can acquire, they can get new locations at cheaper prices, things like that. So net cash can actually be quite great. And even then, their debt position, which is still less than the cash, of course, is fixed rate debt. So you don't have that interest rate risk embedded into the company. And their next rollover period, so what I mean by that is when their next debt matures, which is about $1 billion, is in May of 2024. So they don't even have to worry about rolling over their debt. And even then, they could easily pay it off. Let's say interest rates just keep on going up. They can pay it off with the cash they have on hand at this time. But for comparison purposes, direct competitor Walmart, symbol WMT, on the New York Stock Exchange, has a net debt position of $50 billion. Walmart is a larger company, but it's clearly more leveraged. Like, even if you did 2 times, they have $25 billion in debt if you average the market cap or weighted the market cap. So it's obviously quite a significantly more leveraged company. Next up, valuation. Costco trades at a trailing price to earnings of 36 times, which is expensive given its growth. A strong balance sheet should allow it to trade at a higher multiple. We do like to see that because it de-risks it. So if you have a lower risk company, it should trade at a higher multiple. It makes sense. But 36 times is still high. So if we look at like the historic PE here, it's quite high. It's come down from its all-time high, which is about 46 times, but it's well above the last decade when we saw in the 2010s from 20 to 30 times, and it was slowly rising during the entire decade. So we've really seen this PE go up over time. You've seen multiple expansion. So even if the company does continue to do well, in a bad economic scenario, you can see multiple contraction. So this is where it starts to go down. So even if the earnings are flat, the stock price can go down. Or what you may see as well is the stock price could stay flat and the earnings go up and the PE will slowly go down. And this is what you really want to watch when you're valuing a company, and especially on comparables. So as I was comparing with the balance sheet, we're looking at Walmart for a comparable. It has a trailing PE of 33 times. So compared to 36, it's slightly lower. But if we're using the analyst expectations, which we don't always like to use as a guide, but it's good to kind of gauge the market expectations, it's only trading at 23 times its fiscal 2024 expected earnings. And their fiscal 2024 for a Walmart is calendar 2024. 2023, just to give you an idea. And whereas Costco's forward PE, which is for 2023 and 2024, is 34 times and 31 times respectively, it breaks the year in half effectively. So even if you took the middle point of that of 32, 33 times, it's still quite a bit higher. And these are probably the pretty comparable companies, I would say, because they're both, you're looking for that low cost, consumer oriented program. But either way, it's materially lower the PE for Walmart. So concluding, Costco is a strong company and has great underlying financials, but the valuation is just too high. And I really expect multiple contraction sometime in the future. Like I know some people are saying you can hold it for 5 or 10 years and you'll probably make out fine, which you probably will. But it's really that opportunity cost where you might only get a few percentage average return over the years, just because it's already trading at high multiple compared to other companies.
Yeah, good job, Brett. Like I wasn't expecting you to do the comparison with Walmart, which I think is great that you did do. So, kudos to you on that. Yeah, Ryan, Aaron, any thoughts?
So it looks like analysts are expecting strong growth from Walmart over the next year.
Yeah, I didn't look too much into Walmart just because I was using it as a comparison. But yeah, no, they were I think about $4 EPS this year, like $4.30 or something, and they're expecting around $6 next year. So that's really that. Yeah, it's just quite a strong growth, at least for analyst expectations. I don't always trust them. I'd want to look deeper, of course. Yeah, of course.
But that's an interesting comparison. I like to see the balance sheet breakdown as well, that there's net cash with Costco. So that definitely adds to the investment proposition. It's been a phenomenal company. I'd agree with your assessment, though. It's, at the current valuation, certainly not cheap.
Yeah, I mean, if you look at a price to cash flow basis, I think back to 2000, it traded from 2000 to say 2021, it traded about between 15 and at a low of about 8 times in that range. Sorry, 8-9 times price to cash flow. Right now, the price to cash flow is around 31 or 33 in that range. So, I mean, it's certainly at the historical high end of its price to cash flow multiple in terms of Costco. Great business, love going there. And you can say if it's 5 to 10 years forward, it's probably a company that continues to be a good long-term investment. But when you're paying a premium multiple, it can trade sideways for years and years and years if you're paying too much for a business in the near term. And it does seem like it is on the higher end of the multiple. Good company, certainly.
You guys are Costco members, yes? You guys have Costco cards?
Yeah, for sure. Yeah, and love it. I go there like almost every Sunday with my daughter. It's like she loves the samples.
I don't go there every week, but
it's just a time for us to hang out. That's about it. But she loves the samples, so we're good.
Yeah. And, one of my friends actually just got a Costco card, and his justification was that he only needs to buy 4 48 packs of Coors Lights in a year, and it basically pays off his membership for him.
That sounds like your friends right there. Sounds like
the Saskatoon calculation.
Yeah. Yes, exactly.
That's true.
Everything else on top is just gravy.
You got your membership just for the lunch dates. We already know that, right?
Well, to be honest, the only reason I have a Costco card is because my parents, they got like the executive membership, so they get 2 cards, and I mean, my mom and dad always go together, so they just kind of gave me the other card. Yeah, that's very nice of them.
It's a sweet moment.